Oh my lord. What happened here? What on earth happened here? My lord. Oh boy. Looks like we got a recession on our hands. Oh boy, oh boy. God damn it. The Nasdaq 100 officially, as of today, has gone into a correction. We're very, very close of going into a bear market territory, but as of today, we're in a correction. Amazon is down 8.7%, Tesla is down 4%, Google is down 2%, Nvidia is down 1.7%, and many other large caps are down massively. Here is the Nasdaq 100, and as you can see, this trend line marks a very pivotal point. We hit this trend line and then we ultimately went up 21.61%. As of now, we're down massively from the all-time high. Till now, we're down a whopping 12%. We've broken this trend line, and this trend line, ladies and gentlemen, was here from October 2023. It looks like we're heading further downwards as this market is trying to position itself for a recession. Likewise, the S&P 500 has had a massive correction. As of now, from the all-time high till now, we're down a whopping 6.51%. It looks scary, ladies and gentlemen. It really looks scary. I did warn you that people are about to lose their shirts. If you don't believe me and you're new here, here is my previous video that I mentioned a few weeks ago, maybe a few months ago. BTC often peaks just before the S&P 500 peaks. BTC is a leading indicator to S&P 500. This could be a distribution phase. In markets, we have three kind of situations. The first one is accumulation. So an accumulation phase is right here, where we have just a long accumulation period where buyers and sellers are pretty much fighting over the price and there is no real direction. We don't have a definitive answer from the market, whether it's going up or down. Then we have a moment where we have a phase up. This is a phase when there's more buyers than sellers. We have another period in trading and in markets where we have a distribution phase like this one here. We also had a distribution phase right here during the 2021 cycle where it was just moving sideways for a while and buyers nor sellers could find a definitive answer in whether the coin is going up or down. Then after a long consolidation period, from here to there, it was 99 days, give or take. Right now, BTC is showing a distribution phase, and it looks like we're heading lower. My prediction was right. I did say if we don't hold 61,000, we're most likely going to this section where it's 56,000 US dollars. Now bear in mind, if it doesn't hold 56,000 US dollars, then we're going to head lower. The biggest confluence is at 42,000 US dollars. We might have a black swan event. We might have some sort of crash. Here is a better illustration, and this is from Ben Cohen. The S&P 500 is back at its bull market support band. Amazon is down 8% after missed earnings. Intel drops 20%, biggest drop in 24 years, cuts dividends and lays off 15% of staff. This is the chart of Intel. And right now, we're at the same prices that we were at in 1997. This is 25 years ago. If you had invested 10,000 US dollars in 1999 in Nvidia, it would currently be worth 3.5 million US dollars. Let's do some dubious speculation and let's add XRP to the mix. XRP on the bottom, Intel on the right. XRP has been literally going sideways for the past 8 years, while Intel has been literally going sideways for the past 25 years. And what do you notice? You have one peak here, another peak here, one peak here, and another peak here. Now, Intel is heading down. XRP looks like Intel, but on a smaller time frame. This is breaking news, and Warren Buffett has sold 50% of its Apple stock. Warren Buffett's cash pile is at a whopping record-breaking number at $276.9 billion, with a B, billion US dollars. And the selling pressure doesn't stop. BTC ETF flows had a total net outflow of a whopping $237.4 million US dollars. BlackRock was the only buyer in the space. Everyone else sold. Genesis trading bankruptcy rears its ugly head again. Adding to the bearish action was the movement of 16,600 BTC, roughly 1.1 billion, and 166,300 Ether, roughly 521 million. Arkham Intelligence shows their wallets, and as you can see here, in the past few hours, BTC is being sold on the open market. Also, Ethereum is being sold. Here is the fear and greed index, and currently, if I zoom in, we are at 37. We're at fear territory. We were at extreme greed. Now we're heading lower. We've been heading down for a while, since 68,000, and we're heading further down. The sentiment is definitely bearish at the moment, and we are in a fearful market. This is the chart of the Bitcoin 1 year hodl wave. And if I zoom in and I show you a better illustration, you can see that participants are selling at the moment. If I go to the 5 year hodl wave, participants are also selling. However, this is the 10 year hodl wave. And as you can see here, participants continue to buy the dip. Now you're wondering, why on earth is this all happening? Why is everyone panicking? Why is everyone losing their shirts? Literally from yesterday till now, from Friday close till now, we're down a whopping 5%. The S&P 500 is worth trillions. So 5% drawdown is a massive thing. Just yesterday alone, we had a wipeout of 2.9 trillion. The S&P 500 is worth a whopping 45.8 trillion with a capital T, trillion US dollars. From the last 2 days, it wiped out a further 6 trillion US dollars. Why did this happen right here? And why on earth did this happen right here? Why didn't we just carry on going higher and further? This is the non-farm payroll, and the numbers have gone down drastically. It's because of unemployment. Unemployment has shot up from an expected rate of 4.1% to today's rate of 4.3%. The US government added just 114,000 jobs in July. Unemployment rate shot up to 4.3%. The price of BTC initially showed very little reaction to the soft data. The reactions from traditional markets was far bigger, with the 10-year Treasury yields plummeting 15 basis points to 3.83%, and the 2-year yield a full 23 basis points to 3.93%. And therefore, it triggered the SAHM Rule. Now, what is the SAHM Rule? It's very simple. It is when the rise in unemployment rate that triggered the famed SAHM Rule. The SAHM Rule is the start of a recession when the current 3-month moving average in unemployment rate exceeds the lowest 3-month moving average over the past year by half a percentage point or more. Here is a better illustration, and this is the SAHM Rule recession indicator. It's had a 100% track record. As you can see here, the SAHM Rule recession indicator surged to 0.53 in July from 0.43, suggesting the economy is in a recession. The SAHM Rule signals a downturn once the unemployment rate increases to 0.5% points above its previous 12-month low, after the unemployment rate jumped to 4.3% in July from 4.1% in June. The rule has been triggered. In the last 65 years, there has not been a single occasion where this indicator provided a false signal. Also, every time the threshold has been breached, the unemployment rate surged. This is not a perma bear channel nor a perma bull channel. I always give you both sides of the story. And there's always two sides to every story. We're not going to blindside you. We're going to give you every single alpha that we can possibly give you. The story unfolds and it gets even more deeper. The recession indicator is flashing red, but the SAHM Rule creator, which is this lady right here, Claudia Sahms, has said that this time, read very carefully, may be different. A weak July report that triggered one of the most well-known and historically accurate recession indicators, the SAHM Rule. The rule's inventor, Claudia, pushed back against a plethora of doomsday narratives that gained traction after it triggering on Friday. She starts the article by saying, "I am not concerned that at this moment we are in a recession." She also added, "No one should be in panic mode today, though it appears some might be." In the article, it states as follows. To her point, the Dow Jones Industrial Average sank 1.5% on Friday, while the S&P 500 and the Nasdaq plummeted 1.8% and 2.4% respectively. She continues, Claudia, and she says household income is still growing, while consumer spending and business investments remain resilient. So there are key measures of the economy that are still looking good. July's unemployment figure was likely also boosted by 420,000 workers who entered the labor force last month. Claudia finally concludes and says this time really could be different. The SAHM Rule may not tell us what it told us in the past. Because of these swings from labor shortages with people dropping out of the labor force to now having immigrants coming in lately, that all can show up in changes in the unemployment rate, which is the core of the SAHM Rule. Also, to add to this argument, GDP is up massively at 2.8%. So why would we be in a recession? Here is a chart from Polymarket, and they are speculating that we're going to get interest rates of 50 basis points, not 25 basis points, but a massive 50 basis points. Is inflation re-accelerating? The chart here at the bottom is a 3-month annualized core PPI inflation, and it rose to 5.0% in June, its highest since 2022. This metric has more than doubled in just 6 months. This is also higher in any period over the last 15 years except for 2020 and 2022. Overall, core PPI rose to 3% in June and has now risen in 4 out of 5 of the months. We're going to speak about why this is happening. All of this is all related. I promise you. I predicted this. I knew this was going to happen. I told you long time ago. I told you time ago that this is going to happen. I told you with BTC, we're heading down. We're probably going to see 40,000 US dollars and people are going to lose their shirts. I did warn you. So let's have a look at this. And this is what we call the carry and cash trade. What is the cash and carry trade? It's where investors borrow in a currency with low interest rates, such as the yen, and reinvest the proceeds in a currency with a higher rate of returns. Normally, countries, companies, and high net individuals do this play. They borrow the yen and they invest it where? They invest it in assets such as the S&P 500, such as Forex, such as real estate. And this is what we call the cash and carry play. In the past 25 years, the Japanese interest rates have been at zero. Since 1999, it's literally been at zero. High net individuals, countries, and companies will buy the yen and reinvest it in different markets around the world. The Japanese central bank has made a margin call on the entire world. They have increased interest rates. They want money to come back into Japan. Therefore, all of these countries, companies, and high net individuals have a big problem. The money, the free money that they borrowed, is now at 0.25% interest rates. So what they're going to do is that they're going to take money out to pay for their interest rates. And on this day, they decided to hike up interest rates. So what happened shortly after? Individuals started to sell their assets. They all went risk off and they decided to sell their assets. It happened with the S&P 500. It happened with the Nasdaq, the Dow Jones, the Nikkei, and finally BTC, of course. So what happens next? That's the real question. What happens next? It's very simple. Markets are about to price in a recession. Look outside. Go outside. Speak to your friends, family, co-workers, acquaintances. Go look. Are they doing well? And if we really look at the S&P 500, there's only 7 companies that are doing really well. One of them's Nvidia, Microsoft, Netflix, and a few other players. While the rest of the economy is still struggling, mainly because of interest rate. It was bound to have an effect on the economy. And we're seeing it right now, live and direct. BTC price targets currently at $60,000 US, $60,193, and we're down almost 2%. I did say this many times. My next target is, I warned everyone here, and here. I warned everyone. If you chose to listen, I did warn you all. My next target is at the lower range of this parallel channel. We're probably going to get to the mid 50s, around $54,796. My ultimate target is around 50K. And then my very last target is going to be at $40,000 US, around this mark. Yes, people are going to lose their shirts if we do fall to that kind of levels. From here to there, that's a 42% correction. A lot of folks at this area are going to say that BTC has topped. I've been in this cycle so many times. I've heard this so many times. Cycle is over. It's dead. BTC is over. We're heading down. It's not the case. I've been here many times. The cycle is just exactly where we need to be. We may have been ahead of the cycle. We did go a whopping 90% from there, from 40K. We're heading back down to 40K, and that's my final prediction. Altcoins are down heavily, but I'm going to go for a macro look today. I can show you the floor prices of all of these coins. I had a very good question from a subscriber. Much respect, big up Ian. He had a question, and the question said this: I'd appreciate a deeper explanation on interest rate cuts. Are you saying once there are interest rate cuts in the market, we'll have a bullish sentiment as people have more disposable income? Or what's the correlation with cuts and retail? Very good question. I'm going to go straight to the charts and I'm going to just show you. Seeing is believing. This is the total market cap excluding BTC and ETH. So I'm going to put the Fed funds rate right here. So this is the Fed's funds rate right here, and I'm going to overlay it into total 3. As you can see right here on this chart, the Fed hike started in 2018 it started. The market crashed and it kept on going further and further down. The Fed had one last final cut, and literally 1, 2, 3, 4, 5. 5 weeks later, just over a month, we found the absolute bottom. 5 weeks later. Once we have our final interest rate cuts, will we see the very, very absolute bottom? In September, the Fed is most likely going to cut. It's going to cut maybe 25 basis points or 50, depending on how bad the economy is. In a few weeks, we're going to find out the GDP as well. If that looks bad as well, most likely we're going to get a 50% cut. 50% cut, and then they're going to hold for a few more weeks, a few more months. Then they're going to have to cut again. Now remember, the only reason the Fed cut is not for the betterment of us. They're cutting because something is broken. Once we have our very final cut, now bear in mind, we're not going to go to zero ever again, ever in our lifetimes. That's my honest opinion. We're probably going to go to 0.5, maybe 1, maybe 2%. Kujira was a golden child during this cycle. It went up a massive 1,639% in literally a year, 349 days. Right now, it's gone down a whopping massive from wick all the way till here, 94%, ladies and gentlemen. It's gone down 94%. If you don't think your bags could go lower, then you're awfully, awfully wrong. Literally, from here to there, we went down 82%. Then we had a massive crash from here to there of 73%. So if you don't think your coin can go even further, let me give you an example. Let's say it goes further to 4 cents. It's already at 36 cents. From 36 cents as of today to a crash of, hypothetically speaking, 4 cents, that's a crash of 88%. 88. And it's already gone down 94%. So alts could see a further drop. There are only a few companies that are recession proof. And one of them is, of course, good old McDonald's. Why do you think I'm wearing this hat? Just for fun? If you want to gain some alpha in the space and not be a bag holder like Kujiro, if you like my content and you want to gain some alpha in the space, join my private members. You don't have to be a bag holder holding 99%, losing all your investment and going straight to zero. We give you plenty of knowledge in the space. We got hours of daily coverage on our private members. Join our private members. Trust me, you won't regret it. Peace. Ethereum price targets currently at $2,902. We're down 2.84%. We hit this resistance many times. If we don't hold this resistance, then it's just thin air. My next support is at $2,437. Solana price targets currently at $141, and we're down a whopping 7.52%. It's going to head back to this support line at $127. It looks like this right here is just a fake out. We're heading lower. My next support is at $100. Then ultimately it's at $75 right over here. Blur price targets currently at 14 cents, and it looks like it's about to make an all-time new low. Then we have ADA, and ADA at the moment is at 35 cents. My massive support line is at 19 cents. AVAX price targets currently at $22, and we're down 4.19%. At the moment, this unfortunately looks like a fake out. If we break this trend line, then ultimately this head and shoulders still stands, and we could possibly see a price target at $13.27. XRP price targets currently at 54 cents, and we're down 2%. We're holding this trend line, and it's imperative that we hold this trend line. Right here is very important. DOT price targets currently at $4.90, and we're heading to this trend line right here. We need to hold this trend line. If we don't, then we're going to probably make new cycle lows, and that's going to be very poor and very bad. This, ladies and gentlemen, if you do have some dry powder, is a good time to buy, honestly. Link is at $11.47, and we're heading to this trend line right here at $8.92. that doesn't hold, we're going back to this bear market channel. As you can see, all the markets are red. The only one that's green is BTC dominance. BTC dominance looks like it's heading out and is breaking out. Finally, it's about to break out. We're probably going to get to 60%. Now remember, the only time this changes and the tide changes is once we get sufficient interest rate cuts. Once we get these interest rate cuts, it will siphon into the system. Once people see this, they will have more disposable income, therefore can speculate in different asset classes. Finally, I want to show you how to invest in a recession. What happens is this: markets go up for a while, we'll make new all-time highs, everything is looking real good, real fun. Then we have a moment when that final straw breaks the camel's back. Once that happens, everything heads down, people start panicking, people start getting fearful and start losing their shirts. Markets are all forward thinking. They're at least 3 to 6 months forward thinking. Once it's on the newspapers, such as BBC, such as CNN, such as all of these mainstream outlets, that's normally priced in.